Good evening, all. Let us today understand the impact of capital gains taxation, more so on the long term capital gains taxation arising out of the Finance Bill 2024. Finance Bill 2024 is making a sea change impact by removing indexation on all long term capital assets. That would mean even on immobile properties as well. So the new rate for long-term capital gains will be 12.5%, and in case of short-term capital asset, especially in case of property, etc., would be at the slab rates. Now let us shift our focus on the long-term capital asset. Currently, there is a inflation index which is adjusted, where I think basing the year 2001, the base year is taken as 100, and the cost inflation index for the year 24-25 is deemed as 363 as announced by the CBDT. Now let us for a minute pause and then understand the ramification of this. The CBDT themselves, for the purpose of taking an inflationary impact of real estate, has taken the consumer index or the inflation index as 100 to 363, meaning the multiple is 3.63. Or if you had invested 100 rupees and you had sold a property worth at 363, then there is not going to be any long-term capital gains implication as long as the asset has been held for a term which is akin to a long-term capital asset. This is the current scheme of things. And beyond the 363, whatever is the surplus capital gain will be taxed at 20% plus surcharge plus cess at 4%. The surcharge will be based on the income levels of the particular assessee. But the surcharge is capped at 15. The surcharge is capped at 15%. Okay. Now back to the point which I am trying to convey here. By removing indexation beyond 2001, whatever is the sale value minus the original cost of acquisition minus the original cost of improvement, only these two will be allowed as a deduction, and from that if there is any expense connected with the transfer, that can also be deducted. The net amount of that is going to be the capital gain here afterwards, and on that we will be ending up paying at 12.5%. Now for a minute, if the revenue themselves for the purpose of taxation, assuming the fact that definitely they will want to garner some revenue out of long-term capital gains taxation, had taken a conservative inflation indexed number of 363 vis-a-vis 100 over a 20-25 year span, even if we give a much bigger leeway, let us take even if the number is 500, okay, to expect a property to appreciate from 100 to 500 is not impossible over 25 years. But the fact is, the property, whether they have really appreciated that much or not, that is always a bone to pick. Property appreciation, if we look at it historically, it is only after 2010, or if I have to say after the subprime crisis onwards, the property prices started galloping, and they have reached a particular point where I think now the markets are more or less stabilizing, because the issue now in the market is there is a glut of supply, and there is more so about non affordability of buying properties. Okay, so this being one side, the message is clear that you and me, we will be ending up paying a higher capital gains tax because of the removal of indexation. So if you have to take the base as 100 and keep multiplying, keep taking as 363 as a multiple of 3.63 of 100, and then take 4 as with the sale consideration as 400 and 500 and 600, 700, 800, 900 and 1000, we will come to a situation where at a multiple of 8 or 800 as the sale consideration, with a cost of 100, one will be paying the same amount of capital gains tax, both under the new regime proposed under the Finance Bill 2024 at 12.5% plus surcharge plus cess, and under the old regime of with indexation at 20%. Stock markets over a longer period of time have been yielding a result or a net gain of about roughly 12 to 15% on average. Debt markets have always been yielding not more than 8 or 9% on average. If we adjust these for inflation, the returns will be single digit numbers. On the stock market side, roughly somewhere about 7 or 8% or even say 9%, and on the debt markets it would be as meager as 2 or 3%. So to expect property prices to balloon to 8 times or to 10 times or to 12 times is going to be near impossibility. But there is a catch 22 on this. The catch 22 is going to be, what is the relative holding period for the appreciation? One can understand picking a property in Connaught Place or say in Nariman Point Makers Chambers, where the property prices could be appreciating every third year or every fourth year or doubling in a relative short span of time. We are not going to talk about those type of properties, because those properties are beyond the reach of you and me as a normal common man, or beyond the reach of a upper middle class person as well. So the message is loud and clear. The ministry and the finance minister wants to garner more capital gains tax, and the way she has done it is by removing indexation. This will always be a debatable point. This particular sea change of a difference is going to be working against the government, in my personal opinion. We see that in the stock markets. This does not augur well for the real estate economy, the real estate industry as well. More to come. Stay tuned. Thank you.